Mid-cap see profit-taking even as frontline stocks stay ranged. Power sector plays and financial see some green even as most others drag.
Power sector stocks like Power Grid continue their climb on finalization of the new National Electricity Plan that aims to meet a peak demand of 458 gigawatt by 2032. To this end, 50.9 gigawatt of transmission capacity with an outlay of over 60,000 crore rupees has already been approved by the government in its first 100 days.
The IPO queue grows longer with SEBI clearing offers of Hyundai, India and Swiggy, while the Korean automaker is expected to raise nearly $3 billion. Swiggy's offer size is pegged at about $1.25 billion.
SpiceJet CEO Ajay Singh strikes an upbeat stance after its successful fundraise. Despite pending liabilities, eyes big expansion, but the stock slips. IL Finance too envisages a quick recovery in its gold loan book after RBI's green light.
And gold continues its ascent with the yellow metal hitting a record high of 76,000 rupees per 10 grams on the MCX exchange. Rising tensions in the Middle East, weak dollar and hopes of stimulus-led recovery in China fuel the move.
Hello and welcome to Halftime Report. I'm Nigel D'Souza and joining me is Ekta Batra. Well, Ekta, it's not too often at the midday you see the markets down 60-70 points. And the breadth of the market as well has decisively turned actually as we speak. So just keep an eye out on the screen. As of now, it's looking a little bit jittery. Your portfolio may not be feeling too good. But I'll tell you what, we've had a big run in the last couple of weeks. So some kind of profit taking is par for the course, one would say. Just a few stocks that I wanted to highlight. Easy Trip, the promoter entry went ahead and they sold some stake. Initially the stock was down, but just take a look at what's happened right now. Now it's down a good 15% as we speak. So the street doesn't like that. SpiceJet, we had, the MD, Mr. Ajay Singh, assuring us pending liabilities will be taken care of. He believes that expansion plans are on track. But the stock is down close to 7% after being down nearly 7% yesterday. So the street is not buying that. And now it's moving to below that QIP price, which will make investors very nervous. So just keep an eye out on that. And Vodafone Idea as well, they did a fundraise at around 11 rupees. Post that, we saw a bit of a bounce on Monday, but the stock can't get past that level. And I think till it decisively gets past the 12 rupee mark, we could see supply pressure continue on Vodafone Idea. Ekta.
Hi, Nigel. Well, yes, absolutely. On that point, we need to learn how to temper our enthusiasm with the markets as well. For example, the Nifty is up around 19% on a year-to-date basis. The mid-cap index is up around 31% on a year-to-date basis. So we're sitting on hefty gains in any case. So a little bit of profit booking, a little bit of consolidation should probably be par for course. And not to mention gold prices, which are now up 18% on a year-to-date basis, in fact, giving competition to the Nifty in terms of gains. But nonetheless, let's talk about specific stocks. Let's focus on Piramal Pharma, which is in focus. The stock is up over 5% in trade today. The company said that it estimates to be a global pharma health and wellness company by 2030. To discuss the roadmap for this and a lot more on their CDMO business, consumer business and more, I did catch up with Nandini Piramal, who's the chairperson of Piramal Pharma. Listen in.
One of the things we wanted to do was say, what do we want to be by 2030? And as you rightly said, we want to be a $2 billion company. But one of the other things we also want to do is increase our EBITDA to 25%, which means a tripling of EBITDA. And in the meantime, we also want to reduce our debt to EBITDA ratio or to 1, less than 1. So the way we plan to do that is our three businesses, we believe that there are secular macro tailwinds that will help us. In the contract manufacturing business, we want to focus on innovative work. Last year, our innovation work was about 50%. We want to focus on integrated projects which cross more than one site, whether it's east and west or even two sites. And we want to focus on cross-selling and deepening our capabilities. Third, our differentiated offerings, whether it's antibody drug conjugates, high-potent API, sterile fill finish, also give us very good options to work with customers. And that's the things that attract customers to us. They're kind of magnets and help us get that more RFPs.
You're expecting a tripling of EBITDA. You're estimating margins of 25% by 2030. Till now, the margins have been extremely volatile for the company. How do you expect to achieve 25%, and is that a sustainable rate?
We do think 25% is sustainable, and the way we want to do it is primarily by doing operating leverage. As we increase utilization at our sites in the CDMO business, we expect that operating leverage will flow through to EBITDA. As we actually do higher quality revenue, whether it's the innovation or the differentiated offerings, those margins are higher, and we expect to see that benefit as well. We're also continuing our focus on operational excellence and cost and procurement, and we'll continue to manage that.
What is your near-term guidance for the margins? Because in Q1, there was an improvement year on year, but overall, the trend has still been volatile.
I think overall, we're still saying for the year, we want to keep early teens, actually mid-teens growth and improvement in EBITDA and a significant improvement in PAT this year. So I think we're going to stick with that at the moment.
Okay, so that means that you all will be in the black on the bottom line?
Yes.
Okay. What is your guidance in terms of profitability by 2030? Because the other concern has been the volatility in terms of your profitability or your losses which the company has been making. Can you give us a sense in terms of what the profit target would be?
The profit target will, see, as EBITDA improves, we will see an exponential improvement in PAT. I can't actually give you a specific number, but we will, because EBITDA will improve and debt to EBITDA ratios will be lower, we do think there will be a significant improvement in PAT. But one of the things is that the year is cyclical. So sometimes in the first quarter, it is a little bit lower, and the way the fixed costs work, there might be a loss, which there was the first quarter, but we expect to be in profit for the year.
The company's targeted $1.2 billion from CDMO segment. What is the expected driver? Can you tell us how much is probably going to be innovation-led CDMO, which is around 50% of your business? How much do you expect that to grow to? And how much will probably be from emerging biotech, which has faced funding problems in the US?
So currently, our innovation-related work and our differentiated work has been growing faster than the others. And we expect to continue that going forward. We also and it's hard for me to give you a number between emerging biotech and big pharma, because what is happening is innovation is happening in emerging biotechs, but they often get bought by big pharma. So what we're seeing is right now a third of our business is between generic pharma, then a third by emerging biopharma, and a third by big pharma. But what has happened is we've often started our business in emerging biopharma. They get bought by the big pharma, and sometimes the big pharma don't change it. So that's the benefit is, so I can say I can start out in emerging pharma and then it becomes big pharma. So it's very hard for me to give you a number.
Okay. All right. But overall, the trend has been higher order intakes for the CDMO business, considering that in Q1, your revenue was up 18%.
It has been higher, and where the leading indicators of requests for proposals have been very good. Obviously, biotech funding is still a challenge. Over the year, it has been better than the last 2 years, but it's not reached the peak yet.
Okay. $600 million from complex hospital generics, which is basically your anesthetic products, etc. You've been facing pricing pressure in some of your key products in the US. Where does that stand currently? And do you expect all of these factors to probably settle? How much of complex hospital generics will be from the US? How much of it will be from other geographies by 2030?
So the biggest market is the US, and so obviously we will continue to focus on it and grow products. We will add new products to that and expect to see revenues from the US still continuing. In particular, in inhalation anesthetics, we have about 40% market share there. We don't expect that market share to grow too much, but we will continue to focus on growth outside the US for inhalation anesthetics in particular, because we don't have as much market share in those places. But in the other complex hospital generics and the new products that we intend to add, those will be focused on the US and Europe.
And pricing pressure?
This is a generics market. There will always be pricing pressure, but the pressure is, I would say, slightly less than other generics because there are just fewer competitors.
All right. Consumer health, that's been growing in double digits. Your power brands such as Little's, Lactocalamine grew around 19% in Q1. You're estimating $200 million in terms of sales. How much do you expect the growth rate to probably accelerate within this segment? What do you expect it to be driven by? And any kind of monetization plans for this particular segment, which is, playing into the consumption story of India?
I'm very excited about the consumption story of India. I think there is a great good value for money consumer products, and especially as the Indian urban class is growing, they're focused more on health and wellness. So that's something I'm very excited about. I think our power brands, that's the things that we will focus on, whether it's in promotions or whether it's in new products. Over the last few years, we've seen the growth, and we expect that will continue growth. Our tail brands will continue to grow at market rate, and as they grow bigger and at the right time, we'll decide if we want to actually invest in media and promotion then.
Your net debt to EBITDA has improved. It was around 5 times at the end of Q1 FY24. It's 2.8 times as of Q1 FY25. And now you're targeting even a lower net debt to EBITDA, around 1 times by 2030. Give us a sense in terms of the trajectory. Where does it stand today? And what can we expect subsequently in terms of reduction?
So right now it is 500 million approximately, and net debt to EBITDA. We intend to reduce it as a ratio because we will be growing EBITDA, and we will use some of our free cash flows to both do CapEx as well as reduction in debt.
Okay, so when do you expect to get to 1 times? Would it be probably
by 2030 for sure, but it will be the ratios will be reducing across.
What does that mean for M&A? You've done around 15 M&As till now, which have been successful. What would your M&A strategy be, considering that you will also want to reduce debt?
We'll continue looking at M&A. I think if we see the right opportunities at the right price and basis our debt and cash flows, we will look at them.
Okay. Quickly, before we wrap up, Nandini, wanted your thoughts on the Biosecure Act. And it's been passed by the lower house in the US government. What is your sense in terms of an opportunity from the Biosecure Act for Piramal Pharma?
I think the Biosecure Act hasn't been passed yet by the Senate, and it does have an 8-year time period. But what it has forced everybody to take a look at and see what is their strategy for their supply chain. And one of the benefits that we have at Piramal Pharma is that we can offer an East and West solution that doesn't include China, and I do think that is an opportunity.
Okay, but are you seeing only more queries at this point in time, or are you participating in pilot projects?
So in the CDMO business, it is a long sales cycles, and so people are sending out a lot of RFPs, but I don't think anyone has decided yet.
Okay, so that is the management of Piramal Pharma talking about the Investor Day highlights which took place. The stock is up around 5%. They have tall targets of around $2 billion in terms of revenue, as well as an EBITDA margin improvement all the way to around 25%. To put it into perspective, they did around 10 to 11% margins in Q1 of FY25. So they are expecting sustainable improvement and a reduction in debt going forward as well. So that's the word coming in. We'll take a short break, but up next we'll get you more on the markets. We'll also connect with Biju Mohandas of Leapfrog Investments to focus on opportunities in the healthcare space. Stay tuned.
Welcome back. Well, the markets are still sitting with a cut of around 50 points or thereabouts, but Godrej Properties, that's really bounced back. And we had made this point earlier that Godrej Properties, if it can defend the 50 DMA, it'll see a good bounce. It went multiple times to around 2,850, 2,880. And from there, it's seen a bit of a bounce. So you pull up the last 1 month chart. Numerous times it went down to that 50 DMA, and from there it's seen a bit of a bounce. Now it's at the high point of the day. So that's one of the outperforming stocks, so to call it. The one on the flip side, though, is Granules India. That slipped 1% just in the last 10 minutes or so. And now it's down close to around 3% from the high point of the day at the day's low, Ekta.
Okay, all right. So yes, that's Granules India. That's stock down around 2.6%. Remember, one of their biggest plants has received a Form 483, which was quite scathing. But nonetheless, let's talk about one particular segment, and this is our segment on private equity on Halftime Report, which is called Fundraise. We do have Biju Mohandas, lead of healthcare investment strategy, Leapfrog Investments, joining in to discuss their strategy in terms of private equity within the healthcare space. Biju, hi, welcome to the show. Well, you do have a portfolio of investments as of now, and that, you know, ranges from MedGenome to Healthify, as well as the likes of diagnostic companies such as Redcliffe. Just give us a broader picture in terms of what the healthcare strategy is when it comes to private equity, and how much money do you have currently deployed?
Sure. Thanks, firstly, Ekta, for having me. With respect to our investment strategy in healthcare, it's driven by three factors. We are an investor that invests across Asia and Africa, from countries ranging from Nigeria all the way to Philippines. India is our biggest market, where we have our largest set of investments. And across all of these markets, three trends really drive our investment strategy. One, we are seeing rapid urbanization. If you just look at India, over this decade, the 2020s, we will have another 100 million people living in cities and towns. A large number of them will be in the tier 2, tier 3 towns and cities in India. And this in turn results in massive opportunity to provide good quality healthcare, among other services, to these people. So that's one major driver. The second driver is the rise in non-communicable diseases across all of these markets that I spoke about, and India is no exception, being the diabetic capital of the world, with a massive morbidity, mortality resulting from other chronic ailments as well, like cardiovascular diseases and so on. And then finally, across, again, all of these markets in Asia and Africa, you see a massive mismatch between the demand and the supply, as well as availability of infrastructure and resources like talent. At the same time, technology is emerging quite rapidly. So we see the opportunity to use technology to act as a force multiplier of doctors, of healthcare infrastructure, and help meet the demand-supply mismatch. So across these three drivers, urbanization, growing burden of non-communicable diseases, people living longer but not very healthy lives, and the opportunity to leverage technology to act as a force multiplier, we anchor our strategy in the healthcare space.
Correct. But Biju, I wanted more numbers from you. If you could tell us how much you've deployed currently in terms of investment within the Indian healthcare private equity space.
Just in Indian healthcare private equity space right now, we have about $130 million deployed currently.
Okay. You have $130 million deployed currently. What kind of investment horizon do you have in terms of a timeline for these investments?
We are a standard private equity firm in that respect. Our typical investment horizon is 5 to 7 years. We come in, our strategy and unique value add is helping founders, management teams institutionalize, improve governance, help drive the specific organic, inorganic growth that will result in value appreciation in the company and the impact that it has on its consumers. So we support all of that, and that takes about 3 to 5 years to really put in place. And subsequent to that, we tend to look for exit options.
Okay, all right, fair enough. You have investments in companies such as Redcliffe, which is in the diagnostic space. What is your sense in terms of growth there, considering that it is quite an overcrowded market?
Well, on the one hand, you could say that it is overcrowded. On the other hand, if you look at the utilization of diagnostics in India per capita, it's very, very low. So there's a massive opportunity for continuing growth. Even if you look at the current ecosystem, among the top listed players, they account for, top of my head, I would like to say 10 to 15%, if that, of the market share, with the rest being regional players and hospitals, and then the vast chunk being fragmented mom and pop operators, right? So top of my head, if you were to ask me for a number, I would say 30% approximately of the diagnostic market today is provided by some sort of corporate entity. The 70% is fragmented, unconsolidated entities. And that is where the growth is going to happen. I mentioned urbanization. Redcliffe has driven bulk of its growth from tier 2, tier 3 cities and towns, places like Guwahati, Agartala, and so on, where there hasn't been I'm forgetting the word you used, but the overcrowding. It certainly is not true of a lot of these small tier 2, tier 3 towns and cities. So yes, I do think for disciplined operators who are looking to provide really high quality service with the affordable pricing, the sky is the limit, really.
Okay. What is the kind of return you're envisaging on your portfolio, your healthcare portfolio?
We would expect the standard returns in the 20-25% dollar IRRs. Some obviously end up doing significantly better than those, some not as much, but overall, that's the ballpark that I would expect from our portfolio.
Okay. Any of these companies which are probably going to go to market and where you'll probably see an exit via an IPO?
Look, right now, the Indian IPO market, particularly for healthcare, is really, really attractive. As we build many of these companies out into the future over the next 3 to 4 years, they're exiting via an IPO in India is a very real possibility. We haven't yet finalized or gotten into specific IPO preparation for any of these, but overall, we would want the standards in our portfolio company by the time we are starting to look for exit to be such that they should be able to list in the public markets. And as I mentioned, listing in the Indian Stock Exchange, particularly for our healthcare companies, is probably option number one, though there are other options as well.
Okay, and what is the pipeline looking like for further investments?
It is a very vibrant pipeline. We have opportunities ranging from hospitals in tier 2, tier 3 cities and towns. We have very interesting opportunities to leverage technology to act as a force multiplier, as I mentioned earlier. There are very interesting themes playing out as the China Plus strategy takes shape on the manufacturing side, medical devices, but also pharmaceuticals. So across all of these spaces, the pipeline is quite rich in India right now.
Okay, all right. On that note, Biju, we're going to let you go. Thanks very much for joining in and speaking with us. So that's the word coming in from Leapfrog and their investments, which are focused in the healthcare space in India. Well, for the markets, it's turning out to be a day where the mid-caps are seeing further pressure. So we have the mid-cap index, which is down around 1% at this point in time. And we have the advanced decline ratio, which is favoring the declining side. So around 850 odd stocks advancing to around 1,500 stocks declining at this point. Otherwise, the Bank Nifty just about holding its head above the water at that 54,000 level. So just watch out for that. But let's cut across to Ashmit, who's in conversation with Gopal Vittal, who's the MD and CEO of Bharti Airtel.
Mr. Vittal, thank you so much for joining us on CNBC-TV18. The first question I wanted to ask is, we already have applications such as Truecaller. The TRAI is working towards caller name display. How is this AI path solution different?
So the advantage that this solution has is that, firstly, this is a menace. So more people working on it, better it is, right, for the industry, because it's a problem for the customers. I think what our solution does is that it doesn't require an application. The application you referred to requires an application, right? So ours doesn't require an application. Secondly, like I mentioned on CNAP, you will know a user calling, XYZ calling, but you don't know whether he's a spamster or not, and you could still be frauded. So what our solution does is actually uses over 250 parameters on a real-time basis across every single call and every message on our network, which is roughly 1.5 billion SMSs, 2.5 billion calls, and alerts the customer if it's a spam, suspected spam. We have seen tremendous power in this in the last 6 months. It's an AI model which is constantly learning. We've seen a 97% right identification of spam calls, 99.5% right identification of spam messages. So we're very excited that this will really put power back in the hands of the user to know that they have been protected.
When does this go online, and what will the user experience look like? What will it reflect on my interface on my smart device?
So it will go live from tonight, starting midnight. So tomorrow it was really when it will be active. What the user will see is on the dialer, the number is flashing, the dialer. Above that, he will see a big bold suspected spam. And for the SMS, when the SMS shows in his inbox, above that he'll see suspected spam. So that's what we'll do.
One final question. You will have with you a long repository of bad actors. Yeah. Are you open to sharing this information with other regulators, other telecom companies?
Yes. To the benefit of customers, if there are bad actors, we are absolutely open. We have to set up a mechanism. This is the reason I wrote to the CEOs to share what are the B2B customers so that we can identify those who are not legit and do something about it.
Wish you the very best, sir. Thank you so much for joining us.
Okay, all right. So that's the management of Bharti Airtel. We need to take a short break, but Pritesh Mehta of Yes Securities will join.
Will join and help us out with some trading strategies. Don't go anywhere. Welcome back. Well, let's take a quick check on the options data because these strikes will expire tomorrow. Tomorrow you have the monthly expiry that will play out as well. So let's get them up for you on the screen. We've been making this point that 25,900 call, it's seeing a fair bit of open interest build up. And now the premium has come down by close to around 35%. The indications are the bears believe they can defend this 26,050 odd mark just between today and tomorrow. If in case we can get up and running beyond the 26,050, 26,100 odd mark, maybe we can have a big spurt on the upside. But for the time being, it appears, going by both these two strikes, 25,900, 25,950 call, both of them are seeing massive open interest built up with the premium down 35 to 40%. On the downside, though, the 25,900 put, there's a mix of activity out there. And though the markets are down, you're not seeing the premium spurt up. So that's telling you there is some writing that's taking place at those levels as well. So keep an eye out on that particular strike in the near term. That's between, this week itself. The bulls will count on the 25,700 level odd holding out. So, that's the broad options picture that we're looking at. But let's get in Pritesh Mehta of Yes Securities. Hi, Pritesh. Good day and good to see you in. How would you trade the index? Will you be looking to buy the dip, or do you think a couple of days of consolidation, maybe a mild couple of percentage point pullback, and then you look to get in?
Hi, Nigel. Good afternoon. I think you said it correctly. I think we could see a bit of consolidation, a bit of retracement, but the trend is on the upside. See, when I look at this market in current scenario from a slightly broader perspective, it's a risk-on trade we are talking about. MSCI EM index is about May 2022 peak. MSCI World Index, the developed market index, it is trading at all-time high levels. A volatile metal space have made a comeback, and believe me, there is more room on the upside in this particular space. Dollar index, it is attempting to break below the 2023 low. So I think if you put all these things together, I think we are likely to see more upside in this market from here on. Yes, and also leadership space, that is private bank index, financial space, they have broken out of multiple resistance zone. So I think if we conclude the things in a shorter duration, I think we are likely to see more upside. As I mentioned earlier, bit of retracement expected. But when I look at my upside count, it is open to 26,600.
Okay, 26,600. Got it. What about individual stocks then? You're sounding very, very bullish. And the good news is the one that's led us up till here in the last 1 month or so has been the Nifty Bank. Even on a day when the Nifty is down 40, 50 points, that's holding its ground. Tell us about your stock calls.
Yes, along with Nifty Bank, Nifty Financial also played an important role in this rally. So from the financial space, we like SBI Life. It's a continuation pattern in play. We have seen series of double top buys, and we have seen follow through the bullish anchor column. So buy for a target of 2100. Stop loss would be around 1780. The second stock that we like is from the auto space, Escorts. We are talking about a bullish ABC breakout, and we can see the stock has bounced back from this 10 column average. It has already rallied by 11% this month, but I'm expecting more from the stock. So buy for a target of 5500.
Okay, all right, Pritesh, we're going to let you go on that note. Thanks very much for joining in and speaking with us. So that's the word coming in on the technicals. We need to take a short break, but more on the markets once we're back. Stay tuned. Welcome back. Well, Dabur is under pressure after UBS downgraded the stock, citing rising downside risks. Vinny is here with more details on that.
Good afternoon. Yes, Dabur clearly under pressure today. UBS has downgraded to a neutral rating. Target price is 700 rupees per share. Now, the key risk that they are highlighting is that the potential sales of real juice that could be impacted because there's a rise in competition in terms from cola players. So Campa Cola by Reliance, that was launched recently, where it was launched at a bit of a reduced price. So that could create a bit of a pricing pressure, and a price war is what one could be watching out for from the carbonated soft drinks players, which could be impacting real juice, which accounts to around 9 to 10% of the sales. Even heightened competition in terms of oil, that is increasing. Coconut oil, which is we've seen new entry coming in from Bajaj Consumer as well. So yes, that overall the sales from coconut oil accounts to 2 to 3% of their business. So because of increase in competition, there's a concern around that. Plus valuations are obviously trading at quite high in terms of the levels. Rural demand surely making a recovery, but does it merit in terms of the valuations it's trading at? UBS doesn't find it that attractive, though they said that the long-term story for Dabur, yes, that continues to be in place, and there's a limited risk in terms of demand that is there from the festive side. So keeping an eye out on that, but some bit of a pressure is what one could expect from Dabur. UBS downgrading the stock.
All right. Thanks a lot, Vinny, for joining in and filling us in on reasons why Dabur is under pressure today. Well, for the time being, though, we'll slip into a short break. You come back, we'll continue to focus on the markets. We'll also tell you about IEX. The stock is under pressure after getting trounced 10% yesterday. It's down another 5%. Welcome back. Keep an eye out on Stovecraft. The stock was down yesterday when the markets were fairly stable, just came off a little bit from the top. But currently, that's bucking the trend. And Stovecraft has taken off. So the stock has moved back towards the high point of the day. Now up close to around 5% in a market that's actually seeing selling pressure in the broader markets. But the one that's really got a pounding yesterday as well as today is IEX. Vivek joins us to give us a bull versus bear case scenario on this particular name. Vivek, it's almost a 200 rupees stock. I think from the time this news came, it's down from 235 to 200 rupees in a matter of 24 hours.
Well, absolutely right. It was the single biggest risk factor as far as IEX was concerned. Most of the brokerage that had upgraded the stock, from July onwards after seeing Q1 results and also after seeing the slow progress as far as, the grid implementation was concerned, they had highlighted this as a risk. And what's actually happened is that it appears as though, this particular key risk of market coupling is something that may play out sometime in the future, and this is what is keeping markets very worried. Very interestingly, remember yesterday the stock fell over 11%. Today the stock is in the F&O band, and despite that is seeing quite a sharp down move. Delivery percentage yesterday was close to 26%. Let's have a look at the bullish case. Post the news, we are analyzing what analysts have put out. Investec yesterday said that number one, it is a good opportunity to actually buy the dip. They believe the simulation that is being conducted should actually show if the coupling is beneficial, which in itself is not clear. He's also saying coupling software needs to be prepared and then also stabilized. Need to see how other exchanges react in terms of pricing. Operationally, is it possible that they will be able to handle bigger market shares? So he actually goes ahead and advises this particular dip as a buying opportunity. But bear case, what is Elara saying? Elara is saying market coupling can lead to significant market share loss from the current around mid-80s, 84% to close to 70% by FY27. And they see a 19 to 20% EPS cut as far as FY27 EPS estimates are concerned. IIFL also believes that market coupling is negative for IEX. They see this particular move could risk IEX dominant market share in the collective transactions, and they see almost a 25% cut to their FY26 EPS estimates in case this key risk of market coupling plays out. But markets at this point of time clearly don't like the uncertainty, and IEX is seeing significant selling pressure.
Okay, perfect. Thanks, Vivek, for explaining all of that to us. For the time being, we slip into a short break. On the other side, Manisha Gupta joins us with Philip Newman, the MD of Metal Focus.
Welcome back, and joining us now on the show is Philip Newman. He's MD Metal Focus. Philip, hi, thank you so much for joining us. All-time highs yet again, another day for gold here. 2660 is done, and it's not just the dollar terms that we are making all-time highs. It's in Indian rupees and Japanese yen and Chinese yuan and euro and various other currencies as well. How do you see this one-way surge continuing for gold?
Well, first of all, thanks for having me on the show. It's good to be here again. I think the point you make is really on the money in the sense that because we are having these highs in the range of currencies, not just the dollar gold, that gives you a sense that this is not simply a currency play. We are having investors coming into the market in a meaningful way and obviously driving gold higher. Of course, we have the 50 basis point cut behind us. Expectations are, of course, that the Fed will continue to reduce rates, perhaps not at that pace, of course, this year, but that will carry on into 2025. And unfortunately, the other factor that is obviously out there from a geopolitical standpoint, what's going on in terms of Israel and Lebanon, and unfortunately how that may escalate. So I think those are, two of the factors that are really out there and encouraging investors to come into the market and potentially push it higher as well.
Philip, as the line goes, what goes up comes down. So should people be taking profit, or you think the way the situation is, even if a correction does come, isn't going to be so steep?
Well, I think there's always that risk that you will have profit taking, especially when you are reaching these unprecedented highs and fairly quickly as well. The way we've sort of gone through the 2600 and crashed through that and apparently holding at those levels, I think it's quite likely that you will see some profit taking from investors. So you could very much lose that momentum and see gold potentially fall quite steeply. I think the other thing we have to think about, Manisha, what's happening in some of the physical markets as well, which have been so important in terms of really helping to provide a very solid floor to the gold price. And I'm thinking, obviously, India and China both are trading at a discount. Speaking to my colleagues today in both markets, India seems to be around the $20, $25 level. In China, we're around the $12 level discount. So that gives you a sense that these markets have backed off. And so I think we need to see, which point will they come back into the market. So I think that's something we are certainly looking out for. And so when you bring that all together, I think, yes, you are certainly at risk of a correction, But I think also it could be short-lived. We still have that positive momentum in the market. I think there are still those investors, and it's something we've spoken about on your show many times, those investors that perhaps have missed out on these levels that we're seeing. And so if gold was to, fall perhaps, towards, say, the $2,400 level, I think that would encourage a lot of investors to come back into the market. And so that would suggest that any correction would be, fairly short-lived, I would suggest.
Oh, absolutely. I'm sure a lot of people are waiting on the sidelines to, hop into those kind of corrections there. But Philip, also about silver, and this one also continues to surge higher. How are you looking at the current prices, the very, very strong fundamentals, and what would you say about silver, let's say, 2 years from now?
Well, so it's a very good question there. So, as you pointed out, silver is doing pretty well, but the ratio against gold is still pretty elevated. It's come down to around 83, I believe, this morning or today. So it's still, I guess, underperforming gold. I think investors are looking at that. But I think a dynamic that we've seen play out over the past, few weeks and months is that, on occasion, when gold, reaches these levels and institutional investors think, well, perhaps, at least for the short term, the upside may be contained. Let's think about silver. And we see some of those investors switch their focus to silver, and then it can do fairly well from an investor standpoint. But you're absolutely right also that the fundamentals are very healthy. On the industrial side, the largest end use is the solar market, the photovoltaic market, as we call it. That's still going great guns, and we think will continue to provide that solidity in the market. Obviously, the price-sensitive areas are struggling, but given those fundamentals are pretty healthy, well, I think silver could at least get into the mid 30s and potentially push on from there as well.
All right, so mid-30s for silver and gold. If I can push for a quick word on that, Philip, what's your sense on where the gold prices could be headed?
Oh gosh, well, I think we're still playing to catch up with where gold is really. I think overnight it got up to about 26.70 around that. So it does seem as though investors are pretty aggressive in pushing it higher. It seems as though, is 2,700 possible? I think that would still be quite a push, even though we're only $45 away as we talk today. I think there could be a wall of selling as we reach that level or approach that level.
Well, it's all about numbers right now, isn't it? And we will keep an eye on all of that. Philip, as always, thank you so much for joining us with your sense on gold and silver, both of those commodities which clearly are making the headlines for many days now. But with that, it's a wrap on Halftime Report. Business Lunch will take all the action ahead.